Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 25th, 2025, and we're diving into the latest earnings report from Jefferies Financial Group. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Jefferies has just released their second quarter 2025 financial results, and there's a lot to unpack, from their net earnings to their strategic outlook for the rest of the year.
Revenue and profitability overview. Let's start with the top line. Jefferies reported net revenues of $1.63 billion for the second quarter, slightly down from last year. Their net earnings came in at $88 million. John, how does this compare to market expectations?
Jefferies' adjusted EPS of 40 cents fell short of the forecasted 43 cent, based on a survey of two analysts. The return on adjusted tangible shareholders' equity was 5.5%, indicating some pressure on profitability, primarily due to lower revenues in fixed income and some non-compensation expenses.
Investment banking and capital markets performance. Investment banking and capital markets are crucial for Jefferies. How did these segments perform this quarter?
Investment banking net revenues were $766 million, with advisory revenues up 61% due to market share gains. However, equity underwriting was down 51%, reflecting volatile market conditions. In capital markets, equities revenues increased by 24%, driven by global trading volumes, while fixed income revenues fell by 37% due to a challenging trading environment.
Asset management and non-interest expenses. Moving on to asset management, Jefferies reported revenues of $154 million. What were the key drivers here?
Asset management saw a 43% increase in investment return revenues, thanks to improved performance across several strategies. However, non-interest expenses were higher, with a compensation ratio of 52.3% and increased brokerage and clearing fees due to higher trading volumes.
Management's outlook and strategic initiatives. What insights did management provide about the future, and how are they positioning Jefferies for the second half of 2025?
CEO Richard Handler expressed optimism for the second half of 2025, citing a strong backlog and increased client discussions. The company declared a quarterly dividend of 40 cents per share and repurchased 0.7 million shares. Management believes their market position is strengthening, despite the challenges faced earlier this year.
Key takeaways. In summary, Jefferies Financial Group navigated a challenging quarter with resilience, showing strong performance in advisory and equities, though facing headwinds in fixed income. Their strategic initiatives and optimistic outlook for the second half of 2025 are promising. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Jefferies' performance. They have a solid foundation to build on for the rest of the year.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Jefferies' performance in the comments below.